Hey everybody, good evening, it's Bill Holmes. Welcome to tonight's edition of ProjectManagementForum.net. And hopefully you're here because you want to learn about project stuff. I know that I'm here because I love projects and management in general. I've done this for a lot of years and I enjoy talking about it. Tonight we're going to do something just a little bit different. I know that in my last video I promised to get into the details of requirements, but I thought I'd shift gears here a little bit because I think that the recent sell-off in the U.S. stock market, I guess worldwide, has really provided an opportunity to think about systems as opposed to outcomes. Now, as a project manager, I'm always focused on system issues, right? I want a process in place that will guide my project throughout its life cycle. And I've found that sort of applying that same logic to life has been very helpful. And so let's talk a little bit about stocks. You should never take stock advice from somebody you see on a YouTube channel, and I'm not offering that. I'm talking about a system. So if I happen to mention individual stock, I'm not endorsing it. I'm just talking about a system here. But one of the things I did several years ago was I decided to use an investment strategy, which was to buy Dividend Aristocrats. Now what that means is those are blue chip stocks which have had 25 years or more of dividend increases. A simple way of thinking about that is every year they're paying me a little bit more to own their stock, okay? I compound that by putting all of my investments on something called a DRIP, a Dividend Reinvestment Program, which the broker I use is kind enough to not charge me a transaction fee on. And so what happens is, say stock X issues a dividend, they take that dividend, they rebuy more stock, and it becomes exponentially more powerful over time, as all things do. So you've got 100 shares of stock X. They issue dividends throughout the year. At the end of year one, you've got 103 shares. Now those 103 shares are issuing dividends. At the end of year two, you've got 107 shares. At the end of year two, you've repurchased stock with the dividends. Now you've got 113 shares. You see how this goes. It grows exponentially. And the more you own, the faster it accumulates and the faster it goes. And so now let's talk about my reaction to the recent sell-off. I have my investment strategy in place. I'm putting everything on a drip, and I am excited when the market sells off. And why is that? Well, because I've got a stock which issues a dividend tomorrow. That stock issues a 52-cent per quarter dividend. So tomorrow, sometime during the day, I'm going to have an extra 60 or 70 bucks deposited into my account because I've got a little over 100 shares of this particular stock. Now, a week ago, this stock was trading at almost $52 a share. Today, I checked and it's at $42 a share. So in the course of 5 days, that stock has lost $10 worth of retail value in terms of if I sold it, right? But what happens tomorrow? Well, what happens tomorrow is they're going to issue it a dividend. And instead of only being able to purchase a share and a quarter, I'm going to be able to purchase almost 2 full shares of that stock, right? Now, what in the real world has changed beyond that stock's price? Has that particular stock not issued a dividend increase? No. Has the financials on that particular stock changed? No. Have the fundamentals on that particular stock changed? No. Because people are panicking, I'm buying on sale. And that is a healthy way to look at a system. If I look at it through the prism of a paper loss, right, which is yesterday my stock was worth X, today it's worth Y, that's not a healthy way to look at it for long-term investing. It's all about the system. And so when the stocks go down in price, like happened over the past couple of days, I am at this point in my life, I'm not quite ready to retire, I don't need to cash this stuff in, but at this point in my life, I am excited about it because I am buying what? I'm buying these stocks at a discount over what they were before, which means that when they issue their next dividend, I will be getting even a bigger check from them, and then I will be buying even a bigger investment in them, and that is a very positive force multiplier in terms of how the downturn of the market actually plays to a guy like mine's benefit, right? So I'm using stocks as an illustration here for systems, right? As long as you understand what your outcome is, as long as you understand what you're trying to accomplish, and as long as you put in place good systems, then you don't worry about the day-to-day stuff. You just live your life and be happy in the sense that if the market goes down, I'm buying even more of what I wanted to buy anyway. If the market goes up, well, good on me, because my total investment portfolio and my total assets have gone up, right? So either way I win. Either way I've got more money in the bank to sell if I got to sell it, or I'm buying more stuff on sale. Either way, the system works for me, okay? Again, not stock advice. We're talking about systems here. Hey, look, if you'd like some different views on interesting topics like project management, general management, etc., go to www.projectmanagementforum.net. I'm in the middle of a series on project management lessons from movies. And I think the next one is going to be on Resident Evil. Okay, guys, have a great night. Talk to you later. Bye.